Bajaj Allianz Life Smart Wealth Goal 3 Wealth Variant. Will investing in this help you in the process of wealth accumulation in the long run, or will it add more risk to your investment portfolio? Let us find out in an in-depth analysis in this video. Hi, welcome to Holistic Investment. We help individual investors like you to take the right financial and investment decisions to reach your financial goals faster and smarter. Before analyzing this policy, let us look at some of the key features of this policy. Bajaj Allianz Life Smart Wealth Goal 3 is a non-participating individual life regular premium, unit linked, limited premium and single premium payment plan. So some of the features of this policy are you have the option to receive your maturity benefit or your death benefit in installments with the option of return enhancer. There is also a choice of 5 investment portfolio strategies and 15 funds for you to choose from. You have the option to reduce your premium and also the option to change your premium paying term. There are also tax benefits available as per the prevalent tax laws. So now let's take a look at the investment strategies and fund options available in this policy. So already, as I have mentioned before, there are 5 investment strategies, and the first investment strategy is named as investor selectable portfolio strategy. So if you are someone who wants to allocate your premium based on your personal choice and based on your risk profile, then you can opt for this investment strategy and choose from among the 15 funds below to suit your investments need. You can pause the screen and see how the asset is going to be allocated to each of this fund based on your premium. So just pause the screen and look at how it's allocated. Next, we have here the Wheel of Life portfolio strategy. So if you opt for this portfolio strategy at the commencement of your policy, if you have chosen regular, limited or even top-up premium, these premium would be allocated then to the funds mentioned here in the proportion which they have already selected. You can see in the table they have already selected the proportion which will be allocated to these funds. So based on that, your premium would be allocated to these funds. So if you want some chosen predefined proportion of funds already allocated to the funds, then you can choose this type of investment strategy. So the third type of strategy is a trigger based portfolio strategy. Here under this strategy, whatever type of premium payment term you have chosen, that premium will be allocated between two funds, which is equity growth fund 2, which is an equity oriented fund, and then a bond fund, which is a debt oriented fund, in a 75% to 25% proportion. Also, the fund value proportion will also get subsequently altered due to the market movements, due to the market ups and downs. So if you are someone who wants to allocate your premiums this way, then you can offer this investment strategy. So the fourth investment strategy is the auto transfer portfolio strategy. So this strategy especially helps you to invest your money systematically by automatically transferring money every month from a low risk fund to the funds of your choice. So in this portfolio strategy, your premium will be allocated to bond fund or liquid fund as specified by you. But at the start of each monthly anniversary of the policy, a proportion of the fund value of your bond fund or your liquid fund you have already chosen will be switched to other funds which is also available in the plan as specified by you. So you can also offer this kind of automatically transferring your money every month in a systematic way to start investing. So if you want a systematic way to invest, then you can also offer this strategy. So the fifth investment strategy is a capital preservation oriented strategy. So the main objective of this investment strategy here is to optimize the risk and the return by investing across already they have 5 predetermined funds under this strategy which they want to invest by optimizing the risk and return. So there are a mix of very high to low risk funds. So if you invest your money in this over the years, the accumulated returns are subjected to lesser market volatility. So in the year where you are very close to getting the policy mature and very close to getting your maturity benefit, then where you have invested in such a way that the accumulated returns will be subjected to lesser market volatility. So if you want to invest in this way and to maximize your returns, then you can also opt for the capital preservation oriented investment strategy. So next, let's take a look at the various charges that we will be subjected to pay under the Bajaj Allianz Smart Wealth Goal 3 policy. So first we have here is the premium allocation charge, which is for entering the policy. Second, the policy administration charge, which is for staying invested in this policy. Then third, we have the fund management charge, which they charge for managing the fund you have invested in here. So the fourth here is the miscellaneous charge. So the miscellaneous charge of 100 rupees per transaction will be charged in this policy. Also, they also have the discontinuance or surrender charge. There are charges for even exiting this policy or surrendering the policy. So also there is something called the mortality charge, which is something they charge for providing you the life cover. So as a ULIP plan, definitely there will be fees which will be linked to this policy, which are standard. This is a standard thing. In any ULIP plan, you will have fees linked with the policy. But however, if you look at the Bajaj Allianz Smart Wealth Goal 3, it incurs significant fees and falls short in terms of transparency. Like you don't know how they are going to do the market, how they have chosen these funds, on what basis they have chosen these funds, and how they're going to invest in it. We do not have that kind of clear transparency. And compared to other ULIP plans, these fees are significantly a little bit on the higher side. Also, if you truly look at it, you have charges for entering, exiting, for staying in the policy, for managing your fund, to providing you with life cover. They're also charging for that. Then on top of that, there are miscellaneous charges. So there are so many charges just involved to be staying in this plan, which is very will be get on the higher side of your expenses in the long run. As we have explored the investment strategies and the fund options available and the various charges available in this plan, now we are going to take a look at the benefits available in the Bajaj Allianz Life Smart Wealth Goal 3. So first we are going to take a look at the death benefit. So unfortunately, if the life insured passes away before the policy term ends, then the nominee will get any of the three values mentioned in the screen, whichever is the highest at the time of death of the life insured. So the options are, the first one is higher of the prevailing sum assured or the regular premium fund value or single premium fund value. So this one, the next option is the higher of the prevailing top up sum assured or top up premium fund value. The third option is the death benefit, which is payable, is subjected to the guaranteed benefit of 105% of the total premiums paid till the date of death. So whichever is highest in value, whichever is highest in value among these three options at the time of death of the life insured, then that will be payable as the death benefit to the nominee. Second is the maturity benefit. This is provided by the Bajaj Allianz Life Smart Wealth Goal 3 policy when it is in force and the life assured is still alive. So the maturity benefit is the same as the fund value as on the date of maturity of your policy. Next, we have loyalty benefits. This policy gives you loyalty benefits, which if the at the end of the 10th policy year, or if it's the policy's date of maturity, whichever comes first, then the total of all your premium allocation charges will be added to the fund as a loyalty benefit. So all the premium allocation charges you have already paid this fund, in this policy, it will be added to your fund value as a loyalty benefit. Then we have another loyalty benefit, which is at the end of the 15th policy year and every 5th policy year thereafter till the policy term. Maximum policy term for this policy is 660 years. So the fund booster as a percentage will be added to the fund as a loyalty benefit. Another loyalty benefit is that at the end of the policy term, like on the date of maturity of your policy, the total amount of mortality charges deducted in respect of life cover will be added back as ROMC to the fund value. So some of these charges you pay will be added back to your fund value slowly as you travel in this policy, slowly as 10 years passes by, 15 years passes by, like that. As the policy term starts going, the sum of the charges you have paid will be added back to the fund value as a loyalty benefit. Now let's understand what are the advantages we gain by investing in this policy. So here you can see that you have the option to take out your loyalty benefits as periodical money backs by way of the systematic partial withdrawal. You also have the option to top up your premiums anytime except during the last 5 policy years. except that during that time you can top up your premiums at any time. You can also switch units from one fund to another at any time if you have opted the investor selectable portfolio strategy in this policy. Also, you may at any policy anniversary switch out from any of the 5 unique portfolio strategies. You don't need to stuck with the one you chose at the inception of the policy. You can choose another 5, some any of the portfolio strategies from among the 5 if you want to switch out. You can also alter your premium payment frequency. So, as we have taken a look at the advantages, now it's time to understand the disadvantages. The disadvantages here is that there is no loan facility available under this plan. And if you look at the fund options, the asset allocation under all the fund options looks very similar, which makes the fund option seem repetitive instead of being showing you some variety. It might look it has variety, but the allocation is very similar, so it ends up looking it very repetitive. Also, the return on charges is very seems like a very attractive option, because whatever you pay you get it at the end, right? But that's not the case, because you're not getting the time value of your money. If you have invested the same amount of money anywhere else, you might have gotten a different kind of value, right? Because as time passes, because of inflation, the time value of your money also changes. So here you're only getting the amount of money you paid, losing the time value of your money. So also this plan does not offer any liquidity during the first 5 years of the policy term. So for the first 5 years, there is no liquidity available in this policy. So these are some of the disadvantages we have to understand before committing to this policy. But as we have looked at the disadvantages, now to understand the risk in this policy, or to understand what we actually gain from this policy, the main indicator here is the IRR analysis. By understanding the returns, what is the internal rate of return in this policy? By investing in this policy, what you get. So to do that, we have taken some of the figures mentioned in the policy brochure, and we have calculated those figures as according to the Bajaj Allianz Life Smart Wealth Goal calculator, which they have mentioned in the website. So according to that, we have assumed the calculations, which now we can start to analyze. So first, let's, for an example, assume that a male of 35-year-old has taken this policy for a sum assured of 10 lakhs. So the policy term he has chosen is 20 years, for which he will be paying premium for 10 years. And the premium he is going to pay annually is 1 lakh. You can see at the screen that there is a tabular column which indicates that if he pays the premium regularly in this policy, he receives a return of allocation charge at the end of the 10th year, as they have mentioned in the policy brochure. Also, the fund booster at the end of the 15th year. So, at the end of the policy term, he would have received the fund booster, return of mortality charges, and the maturity benefit. So, accumulating all of that, we have calculated how this fund will perform at the best case scenario and also at the worst case scenario. So, for worst and best case scenario, we have taken 4% and 8% as a indicative, as an example units, because from the policy itself, from the policy brochure itself, they have given this as an example. These are not guaranteed units, like it can differ, it can become 2%, it can become 5%, so it's not guaranteed. So for an example purpose, we have chosen 4% as the worst case scenario performance and 8% as the best case scenario performance. So if you look at the tabular column here, you can see at the 4% performance, like at the worst case scenario, it is giving you at the end of the policy term 14 lakhs 32,590 rupees, which gives you an internal rate of return of 2.5%. This 2.5%, when if you look at the perspective of how long you have committed to this policy and how much risk you have taken, then you will see that this 2.5%, which if you have invested even in a debt fund, which will give you guaranteed return, would have given you much better return than this. Compared to this, 2.5% is very low for a policy term of 20 years. We usually invest in long-term policies, long-term fund, where it has risk just to potentially gain good returns in the long run, right? So if we are taking this much risk and we are investing this much amount of time and effort only to get a 2.5% return, and mind you, this is not even the guaranteed return, it can go even lower. so which is even a lot more riskier. Again, if you look at the best case scenario, in the best case scenario at the end of the policy term, this policy is giving you 25 lakhs 82,202. But what is the internal rate of return? We have assumed an 8% for the best case scenario, but the internal rate of return, the amount we get at our hands is for 6.41%, which is equal to that of a debt fund instrument where it will give you 6% guaranteed itself, but here it's not even guaranteed. So in both the scenarios, the return does not seem justified or even sustainable or even inflation beating returns, let alone inflation adjusted returns. So seeing this, we might be thinking, are there any other investment products available in the market which might be better than the Bajaj Allianz Life Smart Wealth Goal 3 plan? Let's look at it. Let's analyze other investment products available in the market to see if we can get better returns than this. So now we are going to opt for a different investment strategy where we are going to use pure term life insurance policy for the life cover purpose and choose ELSS mutual funds for investment purpose. So we are going to separate a life cover and investment for a better wealth accumulation process. So let's see how this turns out. Here also we are going to choose the sum assured of 10 lakhs in the pure term insurance policy for a policy term of 20 years with a premium paying term of 10 years for a fair comparison with the Bajaj Allianz Life Smart Wealth Gold policy. But the annualized premium we pay here is 8,700 rupees. Whereas for Bajaj Allianz we will be paying 1 lakh as the annualized premium. So here itself you can look at the drastic difference. Also, the remaining amount we are going to use for our investment purpose. So the remaining 91,300 rupees is going to be invested in the ELSS mutual funds over the years. So here at the end, you're going to have 32 lakhs 93,417 rupees for an IRR return of internal rate of return of 8%. So basically here you're getting 8% and 32 lakhs, which is a very drastic huge difference compared to Bajaj Allianz Life Smart Wealth Gold Plan. So this 8% and the amount of return is definitely a inflation adjusted return, which is also proving a point that there are other better investment products available in the market compared to we investing in the Bajaj Allianz Life Smart Wealth Gold Plan. So the final verdict, final takeaway from this analysis, should we invest in this policy or not? See, the Bajaj Allianz Smart Wealth Gold Plan isn't your typical ULIP found in the market because it gives you the benefit of returning charges and fund boosters to see it very, look at it very fancy, to make it very attractive to the consumer. But if you really look at it, this approach actually disrupts the power of compounding, and the significant charges, the high agent commission, and the interference with compounding all leads to diminished returns. So in overall, it doesn't do nothing to boost your overall return for your investment portfolio. Also, the risk you take and the return you get is not proportionate for such a long-term investment. So Bajaj Allianz Life Smart Wealth Gold won't effectively add anything to your long-term wealth accumulation process. And even the return of charges, as we have previously discussed, holds no time value. So if we from analysis itself, we can understand that pure term policies has an affordable premium for higher coverage. You can take even a more bigger coverage, more than 10 lakhs for even a lower premium. Also, you can diversify your investments through various asset class. Keeping your life insurance and life cover and investment actually helps in your wealth creation process very efficiently. So to protect your family, use life cover. To protect your family more financially and guide you in your wealth creation process, you can choose to invest in various asset classes by diversifying your investment. If you want professional guidance, always consult a certified professional financial planner to help your investment journey go very smooth and easier. Because involving a professional will always help you to take the right financial decisions and investment decisions and to even reach your financial goals smarter in a faster way. Right. So yeah, if you want to invest in this policy, our personal opinion is to avoid investing here because there are better options available, and it's a good idea to always keep your life cover and investment separate. So if you want to read this analysis further, then we have a blog post dedicated to it in our website, which you can find through the link in a description. Also, if you're looking for a professional to guide your investment decisions, then also you can book a one-on-one complimentary consultation with one of our financial planners. Also, if you want to gain more investment and financial knowledge from directly from the leading experts in the finance industry, you can also register for a live webinar which is absolutely free in the link which we have given in the description. If you like these videos, definitely hit like and subscribe to our channel. We will be back with more financially beneficial videos such as this. Thank you for watching.